Okay, so good afternoon again to everyone, and welcome to this to the final roundtable in the final session of this RIS forum. So I would like to first thank the organizer for having us today and giving us the opportunity to talk about this super important issue. And the title of this roundtable will be the environmental impact of Bitcoin mining toward a sustainable industry. So let me first start by saying a quick word on the FAIR program at ELB, for which this session is labeled by the FAIR program, to which I'm part of. I encourage you to look to our website to see what we do. We do very interesting events around essentially the impact of all new technologies, being machine learning, blockchains, and other technologies on the finance and the insurance sector. And so we have many exciting events that you can see in replay on the website, and also encourage you to follow the Institut Louis Bachelier communication to be aware of future events. Okay, so let's jump in this roundtable. Maybe a quick word regarding questions. So I will probably do a kind of a break to see if there are any questions in the middle of this roundtable, and we will try to leave, I don't know, like 15 minutes or so at the end. And I really encourage you to ask any questions. So this is not a very typical topic that you will hear about and especially in a climate risk and green transition conference. And we will try to make it as clear as possible. But if we miss something, really feel free to ask any question you may want. Let me first start by a quick introductory word on Bitcoin mining before leaving the floor to our panelists, and I will introduce them, of course. So Bitcoin mining essentially refers to the work that some people, some agents that are called miners, do to secure the blockchain and to essentially to create the blockchain. Doing this activity requires a lot of computational resources. Okay, and why is that super important? Because it's directly linked to the security of the blockchain. So blockchain is a decentralized database in a sense, and the security of this decentralized database is directly linked to the work that those miners are doing. So it's really super important. And of course, there are many questions that comes because they are doing this hard work, spending a lot of energy resources, and therefore creating possibly a lot of a high carbon footprint in a sense, and a large environmental impact. This is actually the main questions that comes to mind, and it was illustrated. I mean, there are many examples of that, but for instance, last week, I believe it was last week, the MiCA regulation in Europe, so the regulation for the market infrastructure, tried to ban Bitcoin mining in Europe, and also to ban the usage of proof of work related crypto. Proof of work is the algorithm of Bitcoin responsible for Bitcoin mining. And they tried to ban that. What that illustrates is that there is still a lot of misunderstanding, in a sense, from the regulators and from many people. And we will try to address that by first focusing a little bit on the economics of the mining, okay? And then we will try to see also what may be the energy impact and the carbon impact of the miners, depending on the very specific characteristics of Bitcoin mining. And we will also address a little bit about the regulation and maybe also the other side, that is, what we gain, what we get, because it's not that we simply mine for nothing, we get something in return, and it's also interesting to be able to talk about that. And also, very quickly, it's important to make research on this topic, because sometimes it's too straightforward. For instance, the level of energy consumption on the Bitcoin blockchain can more or less be measured in a straightforward manner on the blockchain. So it's I would say an easy attack. Okay, and it's super important to go beyond that and to go a little bit deeper to truly understand where does that come from, and also very importantly, where are we going, right? In the dynamical aspect, right? It's not only about where we are, but also where we are going. Okay, so I will. So let me briefly introduce our panelists. So we have Hector Calvo-Pardo from the University of Southampton, on the rightmost. We have Jade Comer, who is the CEO of Mélanion Capital, an asset management company. May say well on that. And we have Pierre Noisa, which is the CEO of Paymium. He will also introduce himself, but Paymium is one of the oldest Bitcoin exchange in the world. So my first question will go to Hector. And so, as I said, I think we will start by the economics of mining. And the question I'd like to ask is, what would you say are the main specificities of Bitcoin mining, of the Bitcoin mining industry, and especially how hard is it to measure the energy consumption compared to how hard is it to measure the carbon footprint they have on the world?
Thank you very much, Louis, for your question. So, on your first question, it is very difficult to measure what is the actual energy consumption. Miners, essentially what they do is they are installing dedicated hardware, which are called unminers typically, which are basically computers that are very fast at producing random numbers of a specific sort, which are, they need to guess what is the actual sequence of 64 numbers and letters that is going to create the next block in the blockchain. Okay. Now, another particularity, as Louis was mentioning, is the fact that the more miners connect themselves, the more difficult it becomes to be the successful one. Okay. So these two things are essentially telling us, the cost side. How much do miners need to think about? How much does the hardware cost? How much does the electricity cost? And then that needs to be multiplied times the probability of successfully being the one that completes the block. And that is traded off against the price of the Bitcoin, okay? And the number of Bitcoins that, if successful, he's going to secure. So that's more or less the economics of the problem. And why is it that so much energy is consumed? Because basically the more power, the more computing power you connect, the higher is the probability, okay? And the higher the price, the higher is your incentive as a miner to pay for better machines or for more machines, okay? And all of that is going to consume more power in quantity. Now, that being said, newer machines are typically more energy efficiency, which is something that we do not often hear, but it is the case, okay? Despite of that, because of, an accident of history, recently the Bitcoin price has increased a lot because of a series of shocks, let's say. And that has, prompted many more miners to mine, and therefore, but then the next thing is, how big is big, okay? And if we want to answer the question of the panel, which is what is the environmental impact of Bitcoin mining in terms of global greenhouse gas emissions, it's in the 0.0 something, okay? So how does it compare to the CO2 that cows all over the world emit just because they exist? It's peanuts, okay? That's the honest truth. Now, to be more precise, I haven't not measured, given the recent Bitcoin price, how much more CO2 has been, but I think it's easy to do. And I don't think we're going to get to a much higher level. Therefore, what I think is the right question is the question with which Christophe ended the previous session, is how much do we as a society value the possibility of having a decentralized, secure payment systems versus how much do we dislike pollution? That should be the right trade-off, and that should point towards having better measurements and having a better sense of, how much do we need to regulate and what is the best regulation. But I don't think the answer should be in terms of banning anything, okay? But that's for the public decision maker to command more studies, to ask experts, and then to start converging as to what should be the right answer.
Thank you, Hector, for your answer. As a follow-up question, I'd like to ask Pierre this next question. A usual thing that we say against Bitcoin mining is that the energy is wasted. So the question I'd like to ask is, taking into account this energy aspect, first, why is it important that this energy is a waste and not something else? And also, can you expand maybe a little bit on the relationship between energy and Bitcoin mining?
Okay, yeah. Well, I step back just a few steps. First of all, I think it's important to give context to a discussion around Bitcoin mining, in that money today is a representation of energy in general, because we accept it as a compensation for work. So proof of work means I accept money as a proof of work for my work. So it's very important to put that context around the discussion. And there are, since it's been now 11 years that I explained Bitcoin to people, or talk about Bitcoin to people around me, I usually start by explaining how the traditional fiat money works. And traditional fiat money is typically pledge money. It's a pledge for future energy that's pledged by the borrower in the case of traditional money. So we have a pledge for future energy, and with Bitcoin we have a proof of past energy. So we have two very different concepts of money at play that, in my view, complement each other. They are not, I don't oppose these two views of the world. I think they correspond to very different mindset and views of the world. So that being said, and going back to your question, it's important that this proof of work can only be produced with energy, and the Bitcoin protocol is devised in such a way that miners are incentivized to go after the cheapest energy on Earth, not just locally, but on Earth. And that makes a big difference. Maybe it's good to put the slide that I brought today on screen, because now we are familiar with the title of this roundtable. Okay. So yes, there is energy being utilized. I don't use the word consumption or energy consumption, because as an engineer, because I've been trained to the science of energy, there is this very important first principle that tells us energy is never consumed, it never disappears, it's always transformed. But you can only transform it, you cannot make it disappear. So we transform, with mining, we transform some energy surplus into a piece of information that's as close as possible that you can be to a piece of energy. Because a piece of information, the difference between a piece of information and a piece of energy is very subtle. Because information saves you energy. It's almost as good as energy. The only difference is that first principle I just reminded us of, that is, information can be replicated, unlike energy. That's the only difference. Otherwise, they have the same effect, physical effect of saving energy or unleashing energy, that's potential energy. So, going back to your question, the question of this roundtable is why is energy wasted? So it's not wasted, it's just transformed. And where does it come from? It comes from energy surplus, because if it's not a surplus, there is a buyer that's going to pay more than the Bitcoin miner for that energy. That's why you have no Bitcoin miners in Paris. You have no Bitcoin miners in New York, in big metropolitan areas, because it doesn't make sense to go after energy that's sold at market price. So you go after surpluses. And Jad will elaborate on that because he knows that business also. So that's the first thing very important to understand, is that the protocol is designed in such a way that we go after surpluses. And surpluses only come from renewables. Renewable energy is by definition a flow of energy. It's not a stock of energy. Stock of energy is fossil energy. So that means the Bitcoin protocol is designed in such a way that it creates a floor price for energy coming from renewable sources. So that's why I'm into Bitcoin. That's because I understand that otherwise I would have dropped a long time ago Bitcoin, because it would be going against a very important movement these days, which is the protection of the environment. And obviously there is no sustainable technology if technology is not sustainable. Well, it turns out Bitcoin is sustainable, and it's even an asset in the transition due to climate change. So your question was very precise. It was why can't we make a useful computation instead of a apparently useless computation? So this is an old question, by the way, because it's been asked on Bitcoin forums 10 years ago, and it's been answered 10 years ago in a way that I found pretty satisfactory. And the short answer is that if you have a dual-purpose mining with some prime number extraction or whatever dual secondary purpose you find, aside from security, then you actually weaken the security of the network, because you create incentives that can go against the primary objective, which is security. So that creates what we call in computer security, that creates a vulnerability. And we don't want vulnerability in monetary systems. We want security first. And that's why there is no dual purpose or useful purpose for computations in the Bitcoin mining protocol. There is one thing that I should stress, though, is that you can do merge mining. So instead of a dual purpose mining, you can have merge mining, which means I can merge with the Bitcoin network. I can use the proof of work of the Bitcoin network on a secondary blockchain. Okay, that's been used in the past. That's been experimented with in the past, and that works. From a security model standpoint, it works. But that's the short answer to your question.
Thank you very much. So essentially, yeah, I mean, maybe Jad, you wanna expand on that? Like Pierre just said that the miners essentially will tend to get located closer to area in which they can get renewable sources of energy. So how does this impact the geographical disparities of miners, and also what can be the local impact of I don't know, a country or somewhere in which big mining farms will come?
Okay, so basically the first equation that I would like to address before answering this question is to know that if the Bitcoin mining is sustainable is to know if Bitcoin is worth something or if it's worthless. Ironically, this morning, the governor of Banque de France compared it to the tulip bubble as a speculative instrument, and he believes it's gonna be worthless. It's all. So if you don't have any conviction about the Bitcoin value, then the whole sustainability debate is over. You're just producing something that is useless, and let's forget about it. But there are a lot of people who think that it is worth something, that they are investing, like we are, in this asset. And at Millennium Capital, we launched a Bitcoin thematic ETF because there's a lot of investor appetite. So value comes from people who believe that something is worth or worthless. If you take the hypothesis that Bitcoin is valuable, then Bitcoin mining is the most sustainable industry, because the incentive of every Bitcoin miner is to go and make the highest profit. To make the highest profit, you just need to go and source the cheapest energy price. And the cheapest energy price are renewables. So not only is they gonna go, today they might mine with non-renewables, but because the industry is still young, the margins are very high. But as the industry will mature, and the more investment we put in this industry, the more it will mature, and not by banning it and keeping it illegal, the margin will still be high, and they will not go towards these renewables. But not only they will go towards these renewables, but they will also finance the whole need for renewable energies that humanity overall wants. 9% out of 10 in the world don't have electricity. We've seen with the current Russian war on Ukraine, the whole electricity repercussion because of our lack in Europe of renewable energy and so much dependence on foreign sourced energies. So not only we should not ban it, but we should use it as a levy to finance the next renewable energy developments, instead of being financed by subsidies like we have been doing in the past. And these subsidies come from my pocket as a taxpayer and are impacting all my money because they are creating money that is diluting the value of the money, the euros, the dollars that you have. Let's promote this industry as a solution for the next renewable transition.
Thank you. So maybe a follow-up question on that. So this idea of building infrastructure essentially out of money from the blockchain is super interesting. What, and this is a question to any one of you, what's the current state and the current geographical areas in where miners are located, and what's the current trend, and how long do you think it will take to truly see such projects as you describe, and essentially big, large mining farms being installed in places in which there are no electricity infrastructure?
What we have seen today is a huge shift in 2021 from Bitcoin miners being mainly in China towards the US. The US were much more favorable of accepting these miners that were leaving China and the drop of the competitiveness was caught up by the US market. So today the biggest market is the US, and they are very welcoming because they understood that they are financing the renewable grid that they have. Before the Bitcoin miners arrived to Texas, for example, they had developed a lot of renewable energies, solar panes, wind panes, and they were struggling because the prices were very low and they were not able to sell it at a decent price. When they came in, these renewable energy producers that were closing doors are now expanding and building up new facilities to accommodate with these miners. And the beauty of it is that because it's a price that is defined by the market, when the end customer needs the electricity, the Bitcoin miner is not taking it because the price is going up. It's not profitable anymore for the Bitcoin miners. They stopped their machine, and we saw it this winter. They reduced their electricity consumption from the Bitcoin miners to accommodate with the peak of electricity demand asked by the local population. The CEO of ERCOT was on CNBC 2 days ago. ERCOT is the main Texas power operator, explaining how the massive arrival of Bitcoin miners improved the stability of the grid and helped develop new projects that are in the pipe to better deliver the population.
Okay, thank you very much. Maybe we can make a quick short break if there are any questions from the audience at this point. Yes.
There's something I've never understood. Why miners have to solve such a computer-intensive program to be rewarded? I mean, to me, the issue to make sure that the system is safe, want to check that the guy who's selling the bitcoins has a bitcoin in his wallet, right? So I guess many miners must know at the same time that if the bitcoins are in the wallet or not. So why do you need to reward the miners to solve such a computer-intensive program?
The answer to this question is to be found in a game theory. It's because you make miners spend actual cost, actual energy, that you keep them honest as a group. So that's the short answer to your question. There are many other protocols where there is no energy spent, and those protocols are much more vulnerable to, for instance, centralization attacks, where a single entity takes control of the blockchain and can then play with transactions, reverse transactions, sensor transactions, and etc. The Bitcoin network is decentralized because of that energy expenditure, so to speak. That's the short answer to your question. You know, I've spent many hours studying Bitcoin, and we tend to say, unless you spend 100 hours on Bitcoin, studying Bitcoin, you won't be convinced, because you haven't touched on all these subtle aspects of the protocol. So I think it's worth spending time on a little bit of game theory and incentives. Game theory is the mathematical branch that studies the mechanics of incentives in systems, and I think Bitcoin is like clockwork, if you will, that makes use of all these mathematical properties, and it's hard to give a course on the Roundtable, I would say, and that's not my take. But thanks for your question. It's a good question. It's just that the answer is takes time.
I would add on it that it's the other way around. The question for me is it should consume more, not less. The whole point of Bitcoin miners is they're gonna go and promote renewables. You want them to consume. You don't want them not to consume. And the proofs of work, they can only be one because there are so much energy that needs to have one secured protocol. So you can have then other protocols that are based, and there are 10,000 cryptocurrencies out there that don't consume energy. And you can also use them, okay? But you need one that is really decentralized and that consumes. It's one of their quality. It's not a default. The whole argument about energy consumption and the pollution that comes with it is asked in the wrong way. It should be turned around completely, because you need this energy consumption as a balancing. If you look at every energy consumption or energy producing mechanism, there is no flat and stable. It's always wavy. And you need someone to come and pick up these energy spent somewhere during these. So when there's wind in the evening, you cannot capture it and distribute it to people because they are sleeping. But if you have Bitcoin miners, then you can monetize it. And then you can spend and develop even more renewables. This is the key of benefit of energy consumption. It shouldn't be. The rhetoric about the whole media is completely upside down because they haven't understood the benefits of this energy consumption. And it's again linked to the value. If you think it's worthless, then the debate is over. But if you think they're doing something very precious, let them do it.
Yes, I would like to ask a question because I'm not sure I follow the whole discussion. The benefit, and I think Bitcoin has a social value, but the benefit of Bitcoin is to be able to process transactions. Now, apart from some technological advances, progresses, the capacity of the protocol to process transactions is the same, whether the Bitcoin is priced at $50,000 or whether it's priced at $100. The difference, however, is that the consumption of energy is much, much, much bigger when the Bitcoin is priced at $50,000. So to me, the question is, could we have the same social value processing these transactions at a lower cost? Of course, we can't have it on the miner side because of this free entry, and I agree, there is overinvestment in capacity because of that. So there are only, I think, two ways to solve the problem. One would be to rethink the reward structure of miners. Maybe it shouldn't be tied as much to the evolution of the price. Or the other one, which maybe are things that were suggested in the papers before, is to look at the hardware production industry. Maybe this is the industry we should regulate. I don't know. But the fact is there is social value in Bitcoin, but to me, it doesn't mean that we need to pay such a high cost in energy consumption.
It's been tried with a protocol that's called proof of stake. So you set the energy level to 0, and you only have the energy of the signatures, which is negligible. So in that case, you are setting the cursor to 0. And the only difference with Bitcoin is that you then have coins in unlimited supply. That is, you can print as many as you want, you can sign as many transactions as you want, you can have as many networks of POS coins, proof of stake coins like that. The only difference with Bitcoin is Bitcoin with proof of work, you can have a limited supply money. You can have what's called a monetary standard. And if you believe a monetary standard is useful, like we do, that's competition to gold. That's competition for gold, for instance. And I believe that's useful because gold is very detrimental to the environment. So it's not that Bitcoin is just not just a payment network. It's also a monetary standard that's competing against gold as a store of value and monetary standard today. We've seen transfer from gold to Bitcoin, and it's going to increase over the next years. So that's the short answer to your question is, if you want just a payment system, you can do away with the energy, the mining of the energy. You have a centralized system, but after all, we are using the euro, which is the same model. Basically, it's very close to a proof of stake coin. So it works, it's centralized, and people are happy with it. If it's very centralized, like traditional money, you need a state behind it, because that's the only way to protect against bad actors. If it's decentralized, you have proof of stake protocol, which works fairly well. So it's an option, but it doesn't replace the Bitcoin protocol. It's just something else. It's something else. And when you don't have energy, you have centralization, and you have a payment system. You don't have a store of value and competition for the gold standard. And I believe it's good to have competition for gold, because gold is used as Russia just used gold since 2014. Russia has stocked gold, so it's bad for the environment, because then you have people destroying forests in Amazonia to get gold from the river. The price of gold goes up, and that's very bad for the environment. So because I'm concerned about the environment, I promote Bitcoin as an alternative to gold. And as you've seen on my slide, Bitcoin mining today is about half the power consumption of gold mining. And if the number of transactions increases, that's a fixed cost. It won't go any higher than that. It will go higher with the layer 2 for payments. So maybe we'll go as high as the current banking system. That's about 250 terawatt hours each year. But we are still a very efficient system with Bitcoin. So I know it's counterintuitive, but it's usefulness of the. No, gold is not adapting. The supply of gold is very inelastic, and there is no. If you have elastic money, that's a different kind of money. That's traditional money, I would say. Unlimited money in unlimited supply. There is an excellent book by Mr. Amos called "The Bitcoin Standard" that explains it. It's a bit thick, but it's very bright, and I encourage reading this book. I'm an engineer. I'm not into monetary. I'm not a monetary expert, but I find this case very convincing. And in practice, it's competition for gold again. And if you don't have this limited supply or inelastic supply and energy tokenization, you have nothing. You have something that's just a payment means, and that's the difference between many. There are many of those coins around already, and they will never be like Bitcoin. That's why Bitcoin is so special in the landscape of cryptocurrencies, by the way, and that's why the Banque de France is so adamant against Bitcoin, because they are making reserves of gold today. Don't ask me why, but they're storing gold. I think we're in the top 5 countries for gold reserves, whereas they could diversify and start buying Bitcoins.
One thing I'd like to add, first to Catherine's question, there is really this notion of security of the blockchain. And although the payment system works the same way if the Bitcoin is priced at $100 or at $50,000, the security is very different because of all the impacts it will have on the miners. So actually, one Bitcoin, when you have it, when the price is low and when the security is low, does not have the same usage as if the security is very high. And second aspect I'd like to add is also that it does not have to be, to me, it does not have to be compared this way. It's not about the competition between a euro or a fiat money or a variable supply money compared to Bitcoin, right? It's only that, to me, Bitcoin is only a protocol. It exists. The market will price its value, right? If people don't care about having a fixed supply asset, they will not buy any Bitcoin, and therefore Bitcoin will be not secure and it will die eventually. If people prefer that, I'm not saying that everyone should switch to having euros from having Bitcoin. There are different use cases. Maybe for the store of value, it's better to have euro. Maybe some people will prefer to have, it's better to have Bitcoin as store of value. Or maybe some people will prefer the euros as store of value because they don't understand Bitcoin or because of any other issues or questions. They will not want to buy Bitcoin. I believe that it's just, it exists. It's a system that it exists. We should understand it. We can also have a word on regulation because it's actually hard to regulate because of this is very decentralized nature. Yeah, so in a sense, I think that we should truly understand it, what are the consequences of having this protocol. And the comparison is not straightforward, it's not direct with the traditional monetary system. I don't know if someone wants to add something, otherwise we have another question.
So I don't have a question, but just a comment. So I think when we talk about the sustainability of Bitcoin mining, my belief is that the sustainability of Bitcoin mining or gold mining HLO does not depend on the quantity of consumption energetic, but depend on the distribution. That means where we put the machines to do mining. I just take one example is that everyone talks about that most of Bitcoin mining took place in China. But if you look at China, that means 10% of the eastern zone of China, most of GDP was produced in the eastern zone. And in the west, okay, they produce, I think, enough energy with the solar system, solar factory, HLO. There was a lot of energy. What's the challenge for the global energy problem? The problem is that the energy is not mobile, except the petrol, brands, coal, HLO. So the only energy, if we can solve the problem of the mobility of energy, I think we have enough energy for all the for every people. But so I think the main challenge, the main sustainability of Bitcoin depends where we put the machine. For example, I know a big China, for example, we put a lot of machine in the Western China where we produce a lot of energy with the solar panel, HLO. I think if we can find a way to place in a good place and also the good moment to do Bitcoin mining or everything else, I think it may be a solution. So for me, I just to let you know, place Bitcoin mining in China is not the problem. The problem is we should look where we put the machines and where we consume energy. Maybe, for example, I think it's a good idea to put something in the Western China because we produce a lot of energy with solar panel, HLO, but we don't have enough industry to produce the goods that we need, okay, because this region is underdeveloped. Okay, so just a comment.
Yeah, thank you for this comment. I think we had a question over there.
From what I've seen measured, the volatility of Bitcoin is between 40 and 80% annualized. You spoke about Bitcoin being a store of value. With 80% volatility, it's hardly a good store of values that I would recommend to investors. But what do you see as volatility, where it's going to in 2 years, in 5 years, the volatility of the Bitcoin?
So it's a little bit outside the topic of the roundtable, but if someone wants to answer quickly, maybe. The volatility, I wouldn't say it's related because the miners don't care that much about the volatility actually. When they, I mean,
it's the volatility of a market pair, Bitcoin euro or Bitcoin dollar. So it's as much the volatility of the fiat money as the euro, as the Bitcoin, and that's day to day. You can, you know, I operate a trading platform, so I watch it. In a single day, it can vary from 10-20%. In a single day, you can have an intraday 20% increase or decrease. But at the end of the year, it's on average plus 200-300% for investors, on average, okay? Just because the network is developing like a network on a quadratic slope, just like mobile phones did or the internet did. We are with Bitcoin where the internet was in 1995. So I don't know if you remember the internet in 1995, but it was very early. So we are all very early adopters of Bitcoin. So yes, you have intraday variations of 10%, 20%, but on average, each year, you'll witness a price increase in the 200-300%. So if you have this kind of yield, you don't care so much about intraday volatility. You just DCA, you cost average your investment by putting a little bit each month or each week to avoid this intraday volatility, to get around it. But frankly, volatility is not a problem for Bitcoin investors. For the past 10 years, they've had a good ride, and everything looks like it's going to continue.
I would just add that when the European discovered the Americas and they landed in Latin America, the Mayas back then had no value for gold, and they were using it just for religious ceremonies. So when they arrived and they started buying gold 500 years ago, the price of gold in Peru, for example, was very volatile the first years because it was going up by 100% every day, maybe. So volatility is not a good indicator of store of value, because if you were in Peru 500 years ago and looked at the historical volatility price of gold, then you wouldn't have bought it and you would have missed a lot. The volatility is only a factor of how much you put as an investment in your portfolio if you want to diversify. And so the only wrong allocation to Bitcoin is depends on how much you want to put in terms of risk to this asset class. So the real wrong allocation to Bitcoin is 0. You can put, our ETF is like at 18 euro. You can put 18 euro. It would have, it costs you the same amount to come here. It's not a big deal for you. And the whole asymmetry of how much you can lose compared to how much you can gain is a unique asset class in this perspective. You don't have any other asset class where you can have such a asymmetric risk reward when we talk about Bitcoin. Are volatile, but they don't have the upside potential as much as Bitcoin do.
They don't have the same risk profile because Bitcoin is decentralized and it's global, whereas penny stocks are small companies that are local. So it's the exact opposite in terms of risk profile, in my view. And there is no example, I'm sorry, there is no example of a global decentralized network like that just disappears or goes away. It won't go away, and like it will go against the desires of the governor of the Banque de France, but it's not going anywhere, it's going to stay.
And there's another point also, is that from our perspective, the volatility of Bitcoin is 0, because it didn't change one bit since the creation until today. All these penny stocks are moving because there are news, there are CEOs coming, there are companies taking over, defaulting, etc. The code of Bitcoin is almost unchanged in terms of definition from the beginning. So it's us, investors, who are volatile. It's not Bitcoin in itself.
And again, so those are interesting questions. I believe a little bit outside the adoption question, as Jad said actually at the very beginning of this roundtable, is super important, because if you believe, or if you think that there are no use cases or no value to attribute to Bitcoin, then any non-zero consumption and non-zero thing will be a waste. But on the other hand, there are many use cases. Here we talked about a couple of use cases of Bitcoin as a store of value for us, but there are also tons of different use cases for people all over the world who don't have access to banking. There is use cases for better inclusion in many countries and places. So I think, we can have the discussion maybe later on that during the cocktail maybe. If we want to come back and to just assume that there are some use cases, and actually right now Bitcoin is not value zero, so it must mean that some people value it somehow for some reasons, and this is going to continue, right? It's very unlikely that Bitcoin is going to drop to zero next year, and therefore understanding the industry, and in particular the production industry of Bitcoin, is super important, and in particular its carbon footprint, which is one of the first attack that goes to the industry. So maybe next question to come back a little bit to our subject here. I guess it would be interesting to have your opinion on regulation. Why and how? Do you think we should regulate Bitcoin? Do you think do you think is it possible to regulate Bitcoin? Do you think we should regulate Bitcoin? And if you think we should regulate Bitcoin somehow, how? And what would be the purpose of that? And maybe, I don't know how we are doing on time, and maybe we can use also this last question as a final word for each panelist and conclude the session.
Yes, we are subject to regulations already because we are registered by AMF as a DASP, Digital Asset Service Provider, PSCN.
The mining aspect, I was thinking.
Okay, I was as a trading platform, we are regulated, and miners are also for their part of their activity. And maybe Jad, you know more about that than I do. But regulation will come as far as bridging the fiat currency system with the Bitcoin system. Bitcoin can exist also as a self-contained network outside of regulation. Crypto to crypto transactions, for instance, are extremely difficult to regulate from a technology standpoint. So I think an excess of regulation on fiat currency will only favor the emergence of stablecoins, crypto stablecoins that mimic the model of traditional fiat currencies. And that's the fine line that the regulators have to walk, I think.
In fact, regarding regulation, there is a regulation about Bitcoin and about Bitcoin mining. And there's a lot of debate, opinions, and interest about regulating cryptocurrencies and Bitcoin mining because they produce a lot of, they consume a lot of energy. But in our stance, what we find that the most important parts to be regulated are the operators, not the crypto in itself. So it's not normal to have in your email box get rich quick schemes by opening an account in a foreign jurisdiction for an uneducated investor. On this side, we really welcome the regulator to step up because all the calls for regulations have very little addressed these non-domiciled exchanges that are luring on the local population. And so what they put in place is the directive on cryptocurrencies in general that try to put the crypto assets in terms of how do they classify. So this is a first step that is going in the right direction in terms of classification. For example, what's a real crypto, what's a security that is disguised as a crypto, like to evolve our current regulation in terms of definition of this asset class. But what they did is they tried to put the same sustainable vision that they're putting in the traditional investment world to the Bitcoin and crypto world. And they don't translate very well because you cannot condone Bitcoin as a cryptocurrency compared to others because of the proof of work consumption of electricity. You should put Bitcoin miners in a regulated space and compare them to other miners. And then when you compare Bitcoin miners to gold miners, then you will see them ranking up in the scale. So it's really unfair how by this administrative work by one committee to the other to arrive at a solution that is upside down, basically, instead of being a solution to stop the world from investing in gold, because 90% of the gold is for investment, not for jewelry or industrial use. It's for investment. And the effects of us investing in gold as inflation hedge is much, much more detrimental to not only the environment, not only to carbon footprint, but also on a social level, on a governance level, on a parity level, on a hunger level. Gold finances all the small wars and guerrillas in Latin America, in Ukraine. There's a lot of traffic behind gold. So this would be a solution to take us out of gold into a cleaner mining, not zero footprint, but much, much cleaner than the rest. And I would like to finish also with another note from a personal experience. I'm from Lebanese origin, and I was living in Lebanon when the whole financial economic situation collapsed, and all my friends and family there overnight lost all their money because the bank seized their Lebanese account and their dollar accounts. And today, as we speak, I cannot send money to my father that is in Lebanon because I have to go through an inefficient financial system that charges me close to 10% just to send money to help my parents. And this decentralized payment system is going to solve my problem, but going to solve the problem of millions around the world. That's why El Salvador adopted Bitcoin as a national currency, because 70% of his population was living on these remittances. And that's how we're gonna bankerize or financial include billions of people that are excluded from the traditional financial system. And there is no CO2 impact calculation that can measure that. This is much above CO2 or climate change. It's about poverty, it's about hunger. 1 billion people have mobile phone but don't have a bank account. And the United States Even the United Nations even declared that financial inclusion solves 13 out of the 17 sustainable development goals they fixed in 2015. So we should not only focus on Bitcoin miners, but we should be promoting all the use cases of Bitcoin and adopting Bitcoin, because it's a key for a much better world, decentralized and democratized.
Thank you, Jed. Hector, you want to have the last word?
So I will try to be brief, and I hope that as this roundtable has shown, I think that the biggest barrier is in ignorance, and the more we talk about it, the more we get informed, the more we know or precisely measure what are the costs, what are the benefits, the more we can think about how to regulate or whether to regulate at all. But without those inputs, I think it's very difficult to have a meaningful conversation without making perhaps the wrong decision with high probability. Thank you.
All right, thank you all. Thank you for all your questions and the discussion. Let's thank all the panelists. And
thanks a lot for a very lively debate. I enjoyed it a lot, so thanks Louis for organizing that, and thanks to the panelists. We have now a cocktail, so you're all welcome to join. And I would like to thank you all for a really great conference. It was a lot of fun for me, at least. I hope for you as well. A lot of debate and discussion, so thanks a lot for your questions, insights, and let's meet in the cocktail room. Thank you very much.